2019 was fraught with tension and turmoil across the globe, whether it be US, Asia, or Europe, with global growth recording its weakest pace in this decade. We have met with intensifying US and Iran tensions barely into the new year. Sounds like the year could have started off on a better footing. Having said that, we are heading into 2020 with some measure of optimism.
Being very selective is one way going forward. The markets may not have done well for certain markets within ASEAN for whatever domestic reasons they are suffering, whether it's Thailand, Malaysia, Philippines. However, within the space in Malaysia, we have seen good performance, really. In the case of Malaysia, palm oil is really a surprise. Should palm oil prices stay above 3,000 per tonne, I think the implication to the rural spending is significant. Bear in mind the whole of the last few years, palm oil prices have been trending down and we have been suffering. Our rural sector is suffering. With the levels at 3,000, it is a big relief to the rural sector. The biggest risk to me in the case of the world will be the US presidential election, to keep a watchful eyes on it.
We have a view that the 2020 should still be a great year for equity markets and bond markets, particularly developed market equities and emerging market bonds. That's where we expect to see the biggest outperformance, particularly if we're right about the US dollar weakening over the course of the year.
Within the US fixed income market, an area that we particularly like is within the US high yield market, mainly because the US economy, US growth is still on trend, still growing. There are pockets of strength, particularly in the servicing sector. And in terms of the high yield market, US corporations still have very strong balance sheets. So for this year, we focus more on the higher quality high yield, so the BB, single B rated bonds that could continue to offer an attractive income, unlike the investment grade area where you can get very little yield, but yet you will have to expose yourself to more interest rate volatility.
I think one of the key issues that many investors face this year and really every year is their fear of loss. Because people fear losing money, they often avoid riskier asset classes such as equities. But we also know over the long term there is no asset class that comes close to delivering the long-term returns of especially developed market equities.
Diversification. That's really the secret sauce of a successful investment portfolio. Diversification both lets you as an investor take advantage of trends that you maybe didn't foresee because you are already spread across asset classes, as well as gives you additional cushion to your portfolio so you have the confidence and the nerves of steel to ride out some of the greater volatility we're going to see this year.
We want to position Malaysia as the gateway to Southeast Asia, and one of the things that we can do now because of Budget 2020 is to be able to compete with some of our regional competitors in terms of offering customized incentives for selected companies. 50 companies, the target for next 5 years, which will invest approximately 250 billion ringgit in Malaysia. We want them to support local SMEs in order to build up the local ecosystem, and of course we want them to create jobs, estimate about 150,000 jobs over the next 5 years.